But
When
yeah,
you're looking for swing points, we want to look at the tips of the candles.
yeah, you want the middle candle to be the highest, and the first candle and the third candle should be lower. So it's like if we go find the next swing pattern, you'll see
Right there.
this one. You see how that this middle one is the highest. It's higher than this one, and it's higher than this one. So it create that swing pattern. It look, it's a peak or whatever. And it's called the swing pattern also is because that it's a point where the market swings from or it changes direction. Like you see, the market was bullish. Then you get like this swing in the market of it swings to the downside. So like that's why we call them like swing points. But however, you need to internalize and make it make sense. But you just want to understand or look at them. Like if you look at them as peaks or however, but you just want to understand that you need to know that that middle candle needs to be the highest. And it's like if you look at this one, you'll see we have this is the highest candle, and then we got two candles
Yeah.
lower. So it's like you constantly just looking for those. Constantly just
What
looking for
what we looking
those.
at now? This live, like right now?
Yeah, this the market.
Okay, because
This the
this what I got to add. Like basically, that's what I'm finna say. Like, well, I was gonna say like, what exactly is that telling you? Like,
it's when you look at it overall, it tells you the trend. It tells you the trend overall. Because if you look at you see this first swing point here,
yeah,
and then you see this next swing
next swing
point
point.
here.
Yeah,
What can you say about or then we can
bearish,
even do this. Yeah, we can even start with this one. Like we can start at this first one. But what can you say about from the first swing point to the third swing point? What are the swing points doing?
bearish trend.
Yeah, so it's like the swing points getting lower. So it's like you got a high right here, but price is going lower. So it's like that's how you can identify
Uh,
your
so 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 in your head, what you would just be like, it's lower until we break this trend. Like
yeah,
in your
and
head, you can pretty much say is you think it's gonna be going lower.
yeah, I pretty much am thinking that the market is going lower until we take out a swing point. Like if we're just going lower and creating new lows, then obviously the trend is just continuing. But if we price comes up, if price does something like this and comes and takes out that high and puts in, like a new one, like if we come up and make a new high right here, that trend has changed.
Okay, okay,
Like that
okay.
trend has now we're getting new highs. It was, the highs were getting lower. So your swing points were getting lower, but then we came in and created a higher swing point. So now that's when we know that the market has shifted back to bullish trend. And
But
that's what we call a market structure. That's what we call a market structure shift. Is
hey, can you?
when
I would say, yeah, That's when you break out the okay.
you
Because I
say that
show,
again.
I show. I'm gonna say when you take out your old highs. No,
Yeah, when if you take out if you take out an old high, it can be like a market structure shift or a break of structure. It just depends on the trend ultimately. But some people look at all of it. Kyle, you can consider it for now, for your learning for right now, just consider all of it a break of structure. And like these swing points are structure.
yeah,
So this market structure. This is what we call market structure. So if you see this swing point right here, you see this little
okay,
swing point where we got this part is higher, this candle is higher, and this one is the
swing low.
lowest. So now this is a swing low, and like let's zoom in a little bit on it.
I
And
got one question. Well, we can come back to it. I just want to ask for I forget.
and you see like how price is coming down below this swing point, that just would be a break of structure. But you can ask your questions. So I don't want
Hold
you
on,
to
hold on,
forget.
hold on. Say that again.
Like you see how price is now currently coming below this swing low.
Yeah,
That would
yeah.
be a break of structure because it's you're like I've said, our swing points is market structure. So a break of structure it just means that it is breaking the previous low and like now we're continuing to go lower.
Okay. You must zoomed in. It look a little different.
Yeah, I had zoomed in. 'Cause I trying to give you a better view. I can zoom back out if you need.
Okay, I see the swing high. I see. Okay, I see that swing high. I see that swing low.
And
Okay, boy. Before I keep going, what you explain what happened if you can right there where it was going down, like where it got that big drop, and right there where it went back up real quick,
right
right
here,
to the left. Come on, one more.
here,
Damn, where you at? Uh,
here, or
yeah,
here.
yeah. Back
This
to the
one,
left.
right here,
Yeah, but to the left a couple times. Like,
this way,
no, well, you just had it. Yeah, back to where you just was.
right here,
No,
this.
right there. Oh, my bad. Like right there.
Is it closer to
Six
Tuesday or
o'clock.
Monday?
Closer, like
Right
right
here.
behind 6 o'clock. Yeah.
Okay, right here.
But go
Oh,
back two candles. Them three. Yeah, like yeah.
okay, I see what you're saying. But yeah, so for as far as that, if you remember, the first time we was on here, we talked about liquidity sweeps. So if you notice, and I'll do the replay because it might make it a little easier to see. If you notice right here, what is this? Like that I got marked out.
What the lowest point?
Yeah, and it's a swing
It's a
low, right?
swing.
Yeah, it's a swing low, right? So in the market, what we look for when we have swing lows and swing highs being put in,
So which one to swing low? I'm
it,
sorry. The one right there?
yeah, this
Oh,
candle
oh,
is a
because it's lower than the left and the right. I got
yeah.
you. I got you.
So
Okay.
that's a swing low. So a lot of times when we have these swing lows, what we do is we mark them out. And when we mark them out, we like to see price interact with these swing lows because that can let us know that price wants to go the other way. Because if price wants to continue going lower, what do we have to do? We have to keep putting in new lows, right?
Yeah.
And if price wants to go to the upside, what do we have to do?
If price want to go to the upside, we'll have to I guess break the new high. I mean, break the
Yeah.
old high.
Yeah, break the old high and create a new high. So
Yeah.
right here, essentially, like you'll mark out your old high also. But what we would want to see is this. We would want to see this swip basically, and swip just mean we want to see price come down below here a little bit, but we don't want to see it keep going lower and lower and lower. We want to see it like kind of push back up. And I'll show you how that. Let's see. Hopefully it don't. Let's see if it. Okay. So when you get a candle like this candle right here, this is what we consider a liquidity sweep. How we went below this low and then price snapped back. Like you can see
Okay.
this if this wick price was all the way down here. This candle
Got
was all the
this.
way down here. And then it snapped back and it closed back inside of the range. It closed higher. So that's a sign right there that lets you know, okay, price does not really want to go lower. And we consider that a sweep. And if we want to
Okay.
confirm that price is going to actually go higher,
And you
we
said it
want,
doesn't. You know, it doesn't want to go lower because it went lower, but it snapped back.
yeah. And so to confirm that price does want to go higher, though, we need a break of structure to the upside, or basically we need a new high to be put in. So what we'll do, what confirms to us after we see like a sweep of liquidity or a swing high taken out or swing low taken out. In this case, it's a swing low that was taken out. So to confirm
Yeah.
to us that price wants to go up, we want to see this old high taken out. And like we'll just play it one candle at a time. And as you see right
Mm.
here, price has just taken it out. So now we have confirmed that price wants to go up, or is more likely to go up than it is to keep going lower because we have taken out this old
Yeah.
high. And now we can just like let price kind of play
So
out or
basically,
do.
you took out the old high and it finished. Like, okay, when we taking out the old high, we still looking at the top of the wick or where it closed? Still at the top of the wick.
Um, when you take them both, like you wanna, in this instance, you wanna look at both. You wanna see like the candle and the wick matters. Like the overall candle matters in general. You wanna see how it reacts overall. So like us, we put this wick put in a new high. So it's like in this case, you would be paying attention to, it just mattered that we took out this high. Like
Okay.
of course, you don't want to see a candle with a wick like this on the opposite side, like with this green candle. You don't want
Yeah.
to see it with a wick all the way up here, but the candle body all the way down here. That
Okay.
wouldn't be a good sign because it'll show that it's starting to go lower. And so you do want to see some strength in that candle, how we seen some strength and we seen the close. And then you see how we just pushed up after we took out that high. We got this Marcus, after we got this basically break of structure, we call it break of structure.
So
And then,
now, okay. How you say breaker structure?
yeah, so that's what we call that a break of structure because we have just broken the old high and now we're creating new highs. And if price, and if we catching price to the upside, and we're trying to keep continuing the trend of bullishness, we need to continue
Continue to take
creating
out
new
them.
highs.
Continue taking out them highs.
Yeah,
So
continue taking out
basically,
old
after
highs.
after that, after that candle, basically after that third right there. So
This
since that
one,
one took one out, now go back to the.
this
So
one,
now that'll be the one we break. We need to break, which we did. So that'll be the new. That'll be a new high, basically. Yeah.
like, yeah, this one right here, we
Yeah.
done took this high out, and now this will be our new high.
New
And
high.
if
Yeah.
we want to continue seeing price go to the upside, we want to continue seeing these highs taken out. The moment price goes up and fails to really take out a high, that's when we can know that the trend is changing. Like here, like this whole time, what was price doing? Like we can walk through a couple candles one by
Well,
one.
okay. So is that low? Is the low still the same, or is it gonna change to that black candle low?
Uh the low is, you saying this from this low?
Yeah. Yeah. Is
It's
that the new
still
low?
currently, this is the lowest point that the market has been. So this is the most relative low.
Okay. Okay.
Right now, no other low matters to us right now because
Okay.
we don't have a new swing low that has been created because this is black candle is not a swing low because it don't have two higher candles on the left and the right of it.
Yeah. Yeah. Okay.
So this is still the most relevant swing low until something new has been put in. And what I was gonna show you is like this is, trend continuations, like right here we
Yeah.
have this low right here and it took out, and this low got taken out. You got this low right here, this
It
candle
got
took it
taken out.
out.
Yeah.
And it continued just taking out lows, continue taking out lows. And that's how you know that the trend is continuing. The moment that price stalls around and don't take out a low and it reverses and goes the other way, like it did here, that's what we consider a liquidity sweep, is when price fails to continue taking out lows and then it decides to go the
Okay.
other
Well,
way.
then back to the right. The same. Back to the same question. And how now? This probably takes some experience, but how can you tell that's the that's gonna be the moment of change versus where it first dropped? You know what I'm saying?
You saying how to,
Like, okay, let's see. Where I asked you, the first where I asked you at the six, right above the 6 o'clock.
Yeah.
What's the difference? What the difference between them three candles and the other three?
You saying
Oh,
like these three
cause
candles?
that's a swing low.
Yeah, because nothing because a swing low wasn't taken out. Most of the time when we looking for reversals, a price to change the side is going, we want to see some type of swing low taken out. Like how we got a swing
Okay.
low here that was it was taken out. And I can go and show you
Yeah, yeah, yeah.
other
I see now.
other examples. Like let's find something else real quick of a swing. Like right here, this would be a decent example. It's not the greatest, but it's decent. How we have this swing, we'll find another one because that one ain't the best. I'll find another one that's way better. Like, okay, you see how we have this swing point here?
Yeah, okay, yeah.
And you see how we then come in, like price was going bullish, 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 and then we came and we tried to take out we tried to keep going higher, but then we went up and we closed back inside the range. So basically, we took out this previous high, but we failed to keep going higher.
Yeah.
So now we can start looking for a downside after we take out swing lows. So it's like you always need a swing low though to be taken out. Like it won't work like right here, a swing high or swing low. Like right here, you see we have this swing low where price was just doing whatever, and you see what did we do right here? Price came and took out this swing low, and
Swing
then it
low.
started going
Oh,
higher. And
and
like
see. Okay, okay.
until and then other lessons we'll get to what points the how far will it go from after it reverse, and
Yeah, that's the
where
point I'm trying to get.
yeah
Well, actually, that's
where
the point I'm trying to get, but I'm trying to
yeah
learn where to get in and where to get out. It sounds
yeah
like that's the
where
game.
where will it stop? But before learning where you getting in and where you get out, it's important that you understand how the market is going to move and what even triggers you to get in and get out. Because what a lot of traders do is a lot of traders find out how to get in and get out first, and then that be it. They
Yeah,
learn to get in and get out, but they don't know how the market move. They don't understand the context behind what they learn. They just see this is how I get in and get out, and it's almost like a teaching a sports better to how to work a sports betting app without properly teaching them how to sports bet. Like,
yeah,
and you done showed them how to do it and they just want to, they see that they can make money betting on the game. So now they just go and they might have win a couple bets. So now they in deep, like I done won some, and now they, addicted because they know the possibility that they can win, but they haven't really sat down and understood what makes a winning bet. What are all the moving parts to a bet and all of that? Because like you can easily learn how do I enter, how do I exit, but it's like you want to understand what even triggers a entry and an exit. And like this is the best thing that you can, first understand is like a liquidity sweep. And because once you understand liquidity sweeps and like what makes the market reverse, then you can understand where you need to get in and where you need to get out, and everything else will go along. Cause like that's a lot of the beginning. It's gonna be showing you how the market pulls together. Like everything you're gonna learn is gonna get to the final destination of like you just gonna be like one day it's gonna be like, damn, I'm ready. But every lesson or every teaching, goes along with the next one. And it's some stuff, if you learn too early, then you'll be a little confused. You'll be like, damn. But then, once you go to the next lesson, you won't be scratching your head as much because it'll make the next thing, make even more sense.
yeah,
But the main thing, and that's why I say like learning, understanding what a swing point even is important because once you understand what a swing point is, Then you can mark out your swing points and you can wait for things like this to happen or look at things like this on your chart. It's like how we have this swing point here where the market was going up, and then you see what happened. The market tried to go higher, but what did we end up doing? We ended up we couldn't go higher from here. The market came failed to go higher, and then what did we end up doing? We ended up going lower. So you
Yeah.
like would have been able to catch something going lower. It's like if I go back to here, it's the same thing. You want to if price is going up and we're in trades to the upside, we want to continue to see, we
Yeah.
want to continue to see highs get taken out. Like this high right here was taken out. So it's like we want to continue seeing highs taken out. And right at this instant, I'm bullish unless this low. Like if we come down and we take out this low and
Yeah.
keep going lower, now I'm starting to get bearish because we're now putting in new lows. Right now, we're currently putting in new highs. So if we're putting in new highs, that means the market is going up or it's going to continue going up until we can fail to start putting in new highs. So like right here, you see we just failed to put in the high right here. This is
Okay.
the highest point. So now we have created a swing point. So now we want to see what is the market going to do? Is it going to continue putting in new lows or is it going to keep going to push higher? So this is something we just tend to why okay, this candle taking out this low, so we going lower, but and I know you probably wondering now, okay, we had this swing point created right here. We had this new high created, and we have this new low right here created. It's like, what do we do now? And for now, for your understanding, what you do now is nothing. Right now, you do nothing. Right now, when you have this swing low here and this swing high also here, you wait until one of these is taken out. Because
Okay.
if this high now gets taken out and we fall back into the range, now we can start looking for trades to the downside. Or if price just
Okay.
pushes all the way down here and takes out this low and snaps back into the range, now we can start back looking for trades to the upside.
But we needed to tap somewhere to let us know our next move.
Yeah, basically. So sometimes you'll be in those areas of you're just looking for more information.
Is that when we all say choppy?
Choppy just is choppy more so that too. We don't want to trade in choppy conditions. When it's choppy, we want to wait. But a lot of times choppy is a little different than waiting for more information because choppy mean the market just literally moving sideways and not doing anything. But during this time, it's really just patience because it don't mean the market will be choppy. It could actually be moving lower, but you gotta wait till it hits your objective before you can get triggered to do something.
But
So
right
it'll
now,
just
you just be guessing here. It
not
would be
even
it'd be
guess.
against what we do because we.
Well, I guess you could say guessing because you'll just use, but
I'm
a lot
saying
of
you said don't do nothing. I'm saying if you were to do something, you
yeah,
wouldn't have that
base.
much
Oh yeah.
information.
Yeah, now you would basically be just trying to guess or predict what'll happen, and which is not totally wrong to do, but you don't want to be guessing and entering. You want to
Yeah.
be letting something happen and then you react. So it's like with trading, we don't want to be we don't want to be weathermen in trading. Like we don't want to try to predict the forecast. We just
Yeah.
want to react to the forecast. Like if it's gonna rain and we look out our window and we see that it's raining, we know we need to bring a jacket. Like we ain't got to try and guess. We just, adapt to what's going on, and that's what we do. Like when these swing points and when these swing levels are taken out, then that's when we know that it's time to react or when it's time to do something. So what is this? Oh, this is
Okay.
this current market right here. So
I just need to lock in and see. Like you said, you learn how to step. Because one of them, I need to learn what I need to. I know it, but I need to lock in what's confirmed that it's gonna stay, the trend gonna stay, or it's gonna switch. I wrote it down somewhere.
Yeah, and that and one of them videos that I got talk good about, but I'm gonna give you, I'm gonna find. I'm finna find one now, so
Nah,
I can
bro,
send it to you
you
now.
didn't already sent a lot.
You already got one on it, but I'd rather you like get this.
I seen the one talking about what I do if I was starting today.
What is? I'm trying to remember. Shit, most of the time, I don't be remembering. This will be decent, something that you can watch outside of anything else. Like this will probably be the best first thing. Let's see. Okay, this will be better. Okay, but it ain't that long either. It's only like 12 minutes. But that's the main thing is market structure is just understanding your market structure because because once you understand that market structure, then we can move to the next part, and that's really the part that you want to get to. It's like because it gets smoother and it gets you get a better understanding, but we have to get this market structure because like I say, no matter what strategy you use, market structure will be a part of it. Like you have to be able to determine is the market in the uptrend or is it in a downtrend. It's like when you can determine those things, that's what will, turn you into a great trader. Is like once you can identify those things, like once you can come into the market and see that we have a swing low here,
Mm-hmm.
and then you see we broke this swing low, and now, and prices continue. Now you can see that that trend of that downside is continuing unless this candle here snaps back into the range, then you would know like, okay, the trend to the downside is continuing. And it is a market structure indicator. Let's see which one. Nephew Sam. Let's see. Let me send this to you first. I know me probably. Let's see. And it's this indicator. I'm gonna try and send it to you too, because it make it easier because you don't have to really guess. It'll tell you where it'll help you when you starting out. Understand where are the market structure shifts or where are the market structures happening. It'll kind of tell you what's going on. Let's see if this the best one
Yes.
though. Let me make sure.
Can't vote no letter.
Okay, I like this one a little more, but I don't see the shit on my chart. Okay, yeah, this one way better because it also show you all of the
Yeah.
pivot points. It'll show you, so it'll be easy. Now it is what you do have to be aware though with indicators. They not perfect, so they will miss stuff. But if you like that last link I just sent you, if you just wherever you got trading view, whether it's your computer or your phone, if you just open that link on whatever device it is, it'll plot that right onto your chart.
That's the other thing I hate that I took so long, nigga. I'm gonna have to learn how to rework a computer. I just said, I'm seeing you going through these buttons. Oh my goodness. I can't become old head.
Hey, it's a lot of people that don't
I was finna send him a little. a little what you call a message, a little for the beginners. I'm like, shit, I'm still a beginner, but still,
Shit.
just on some. Goddamn it, bro, we in this together. Goddamn it, you think you behind? You know, ain't no such thing. Ain't no, it ain't nothing too late. I
Yeah.
promise that was the biggest. I can say that was the biggest thing, but like,
Yeah.
hey, there's
Yeah.
somebody in here that'll learn with you,
Yeah, people, it people who need to hear that because a lot of time people be scared to,
but don't want to be a bother.
yeah, and like shit, this, yeah, I'm here to help and make sure people can get to where they need to be. Cause like you saying, you really not behind. And then one thing about everybody that I work with, like from when if Gary get on here, Omar and them get on here, like they haven't even been learning a year. So it's really perfect, like because they love, well, I ain't gonna say they love, but they have got used to showing what they have been learning. And
Yeah,
they can tell it, and they can give a beginner a perspective like, yeah, I've been doing this for this longer and I've been able to do this since this time, and they, because Omar do a good job at motivating new people to telling them like, yeah, once I first started doing this, I didn't know nothing. And now where he at now is way further, and where Gary at now and where
Z.
Z at now, like they all in a completely different place. And it didn't take them long. It's just that initial period of once they learned all of those basic things like market structure, like which I really feel like market structure is going to be the toughest part, but it's not even hard. It's just
It
different.
is, and it's probably like it's probably the boring part. Like you said, everybody want to get to the when do I get in, but that it's
Like,
like teach somebody to play basketball. Come on, you can't teach them how to shoot threes before you teach them how to
yeah.
dribble that mother.
Yeah, coach won't even let you put that ball in the basket. You go to practice, you probably be weeks before you think about putting the ball in the basket.
Hey.
He had you shoot fake jump shots before he let you just put that ball in that basket.
Yeah. Fundamentals.
Yeah, so that's all that's really going on now, and just them fundamentals. And once you get them fundamentals, is shit. That's really all trading is the fundamentals, because once you understand the fundamentals, then you just add anything on to your fundamentals. But like you were saying though too the other day, it's really just making sure you get you some time on the chart, whether it's, it could be 10 minutes, well, you could be like, just let me get on here real quick each day and let me make sure that I can identify swing highs and swing lows. And then, moving towards, okay, let me see if I can identify these breaker structures and these things that's going on. And like I said, just make sure you watch that video that I sent you. It ain't that long, but it's
The one,
going,
the most recent one.
yeah, the most recent one. Like that's the most recent, because that's what we going over now is the market structure, and it's going to talk about the swing low, swing high, and just how to understand market structure. And it's not a long video. It's about 15 minutes, and you get through that pretty fast. And then and if you have to watch it, if you have to watch it a couple days, but once you learn market structure, once you understand it, it'll be something that can't never be taken away from you.
Okay.
It's gonna be something that's with you and a part of you, and now you gonna feel you gonna feel good understanding market
I want to
structure.
learn it so I can be like you and goddamn just teach this shit.
Yeah, and that's what we need. That's why I love to teach something, because definitely like when Gary and them will be here, they'll be the gave you their perspective on it, of being able to teach or to share people. And you get a bigger reach and get to
Yeah,
more
yeah.
people when it's
I
like
was
you
about to say you the
understand these
teacher.
things.
You the teacher, but hey, we might meet somebody that's just the network, you know what I'm saying? Somebody who
Yeah,
just literally
yeah,
so all right then shit. Hey, I guess I ain't trying to cut it off early, but hey, I guess I got videos to do.
Yeah, but nah, it perfect timing
Yeah. So
because
we got a
shit.
good one there. We got a good one there.
Yeah, perfect time. Say I was saying 8 to 9. So yeah, that's perfect. If you had any questions or
I guess
anything, just let me
I'm up.
know.
I'm up. I ain't on that bullshit. I'm watching something tonight.
Bet be easy.
All right, very appreciation, man.